Thank you for joining me. I'm Alex, and I'd like to talk to you about Ulta Beauty. And I would like to talk to you about Ulta Beauty because they absolutely got destroyed after reporting earnings. So, Ulta Beauty is a beauty products manufacturer or seller at the very least with their own stores. So they're a retail business. They are selling their own branded products and other things. Their price is $237, which is down $100, $99.35 or something, and a PE of 20. So that is a fairly healthy PE. It's not very low, as you would expect from a company that just lost 30% of their value. Dividend yield is 0, and a payout ratio is surprisingly also 0. So they don't pay a dividend, so if you're a dividend investor, you can find more videos there. Revenue of $2.4 billion, which is up 20% year over year. Fairly consistent growth, fairly significant growth over the past few years. Earnings $658 million, which is also a consistent and decent growth. So just to sum that up, their growth is pretty decent, and their earnings report did not really change that. The stock took a nosedive because they changed their outlook from 6% same-store sales growth to 4%, but 4% is decent. It's not bad growth. 4% is actually a pretty good growth for retailers, especially in the current climate. So I don't quite understand why it took a nosedive, but I think it's more of a correction to where they should have been in the first place, rather than a correction that, makes them severely undervalued. So I think that there was a lot of positive things going on that made people overvalue the stock, and this correction kind of brought them to where they should be, reasonably. Total assets $3 billion, liabilities $1.3 billion, and net tangible assets of $1.8 billion, of which $400 million is in cash and cash equivalents. So balance sheet looks pretty good. Actually looks amazing. So if you take all that together, then, as I said, for dividend investors, this obviously isn't the stock for you. For a growth investor, I think this would be on the lower end of a growth stock. So definitely something to consider. And for a profitable company, I think that the growth is pretty amazing. So if you're a growth investor, definitely do some research, look into this stock. But for the value investor that I consider myself to be, the PE is slightly over 20. They don't pay a dividend. The balance sheet looks amazing. The growth is pretty good. And to sum all that up, for a value investor, I think this is a fairly strong buy, even though the PE is fairly high. So, again, if you can't find any better stock to put your money in, you have a stock that's solid with earnings that are decent, with a growth that's decent, with a balance sheet that's amazing. The only slight blemish here is the PE is ever so slightly too high. So I think that if you're a value investor, definitely look into the stock. It looks to be a pretty good stock at a pretty good price right now. That's it for me for today. If you haven't subscribed, make sure to do so. If you like this video, I'm coming out with more videos every day before market open. I hope you have a successful day.